In this video, we will be discussing an example of adjustment of input tax credit and calculation of net tax liability. The supplier or a dealer in Kerala has provided these details. He has purchased the goods from a supplier in New Delhi and also from another supplier in Kerala for rupees 5 lakhs and 2,50,000 respectively. Further, he has sold goods to a customer in New Delhi for rupees 10 lakhs and another customer in Kerala for rupees 8 lakhs. On all the transactions, GST is applicable at the rate 18%. Further, they have provided that at the beginning of the month, input tax credit was available under CGST for rupees 30,000, under SGST rupees 30,000 and under IGST is 1 lakh. Further, interest and penalty is payable under CGST, SGST and IGST. The details have been provided. Interest and penalty amount adjustment we will see a little later. First, we will start with the calculation of input tax credit which is available. So, while solving the problems, we will be making the two tables. One is calculation of tax on outward supply and calculation of net tax liability. Along with that, the another table that we will prepare is for input tax credit. So first of all, let us see the total input tax credit which is available with us. At the beginning of the period, it has been provided that we were having the input tax credit available under CGST 30,000, under SGST 30,000 and under IGST 1 lakh. So these amounts can be utilized to pay off the liability during this month, current month. So that is why we will start our input tax credit table along with the opening balance under IGST 1 lakh, CGST 30,000, SGST 30,000. Further, during the month we have purchased the goods from different suppliers. So on that also we must have paid the tax. So for that input tax which has been paid, we can further claim input tax credit during the month. So this tax will also be added along with the opening balance which is already available at the beginning. So further we will add the input tax which is paid on the purchases during the month. First purchase is from the supplier in New Delhi. Now, the dealer who has provided these details or who has purchased the goods is in Kerala and the supplier for this transaction is in New Delhi. As they both are in different states, this is an example or this is a case of interstate supply. So as we have already discussed, on interstate supply, IGST will be applicable. So on this 5 lakh rupees transaction, 18% will be calculated under IGST. So further, along with the opening balance which is available under IGST, we will further add the tax which is paid for the purchases from New Delhi. So on that, IGST will be calculated at the rate 18%. So on 5 lakhs, 18% will be calculated, that is 90,000 will be the further input tax credit which will be available under IGST. Another purchases that we have made was from a supplier in Kerala. Now the dealer who has purchased the goods is also in Kerala and the supplier as well is in Kerala. That is why it has become an intrastate supply, that is supply within the same state. Being an intrastate supply on this transaction, CGST and SGST will be applicable. Now the tax rate which they have provided, 18%, has to be divided between CGST and SGST. That is, under CGST, 9% will be the tax and SGST, under SGST, 9% will be the tax which we must have paid. So on that 2,50,000, the supply value, inward supply value, on that 9% CGST and 9% SGST will be calculated. That is 22,500 and 22,500. So at the beginning under IGST, we were having the input tax credit of rupees 1 lakh. Further, 90,000 was paid for the purchases which were made during the month. So the total credit which is available for the month is 1,90,000. Same way for CGST, initially the credit of rupees 30,000 was available. Further, 22,500 was the tax which was paid on the purchases made during the month. So taking the total 52,500 is the credit which is available with us. And under SGST, at the beginning we were having the credit of rupees 30,000, and further 22,500 was paid at the time of purchase during the month. So total credit available under SGST has also become 52,500. Moving further, let us see now the tax liability which is payable. So the tax liability which is payable by the dealer, gross tax liability, is mainly payable on account of sales. That is, when he has made the outward supply, he must have collected GST which now he is supposed to deposit to the government. That is his gross tax liability. So he, being in Kerala, he has supplied the goods, he has made outward supply to a customer in New Delhi. Again, both of them are in two different states, so it is an interstate supply. So again, on this transaction, IGST is applicable. However, now this time it is an outward supply. So this IGST he has collected from the customer, which now he is supposed to deposit. So it is his liability. So under tax on outward supply and net tax liability table, we will add it under IGST. That is, this is the tax liability on account of sales to a customer in New Delhi. On that IGST we will calculate at the rate 18%. So the supply amount was 10 lakhs. On that 18%, that is 1,80,000 is payable under IGST. Similarly, the next supply has been made to a customer in Kerala. Now the supplier, our dealer, is also in Kerala and the customer is also in Kerala. So it is again an intrastate supply. Being an intrastate supply, on this transaction, CGST and SGST will be applicable. However, we have got a single tax rate, so again we will divide it into two. We will divide it equally between CGST and SGST. So 18% divided by 2, that is 9% under CGST and 9% under SGST. So the supply amount or value of supply is 8 lakhs. On that 9% we will calculate CGST, 9% SGST. So 72,000 is payable under CGST and 72,000 is payable under SGST. So the total tax payable is 1,80,000 under IGST, 72,000 under CGST and 72,000 under SGST. This is the total liability or gross liability. Now why we are calling it as gross liability? Because further we can adjust the input tax credit which is available with us, and then we will get the net tax liability which is supposed to actually be. So now let us start the adjustment of input tax credit. Now, as we have discussed in the rules, first of all, we have to utilize our credit of IGST fully. And once IGST credit is fully utilized and the balance in input tax credit under IGST has become 0 or nil, then only other input tax credit balances can be utilized. So we will start our adjustment with the input tax credit of IGST. Under IGST, we have got the credit of rupees 1,90,000. Now, how this credit can be utilized? Again, for that we have discussed the rules. So first, this IGST credit can be used to pay off the liability under the same head, that is under IGST. Now, as we have calculated under IGST, the tax which is liable to be paid is rupees 1,80,000. So the credit of rupees 1,90,000 which is available with us can be utilized to pay off this tax liability. So accordingly, this 1,80,000 will be fully settled or will be fully adjusted with our input tax credit which is available. So the balance payable under IGST liability will become 0. And coming back to our input tax credit, here 1,90,000 was the ITC or input tax credit which was available. Out of that, we have utilized 1,80,000 amount to pay off our liability under IGST, but still we have got rupees 10,000 excess balance available. Now, as we discussed in the rules, this excess balance under IGST can be utilized to pay off the liability under CGST as well as SGST, both in any sequence, in any proportion. So there are many alternative solutions which are available. We will discuss about the alternative solutions also later. But here we will assume that it has been utilized in equal proportion to pay off the liability under CGST and SGST. That is, half of the credit has been utilized to pay off CGST and half of the credit is utilized to pay off SGST. So the 10,000 credit, excess credit which is available, here 5,000 we have utilized to pay off liability under CGST and 5,000 we have utilized to pay off the liability under SGST. So under CGST, before this adjustment 72,000 was payable and under SGST again same 72,000 was the liability payable. Now from that 5,000 we have adjusted under each head on account of this excess balance which was available under IGST. So the balance liability under CGST and SGST will become 67,000 each. Coming to our input tax credit table, as we have discussed, first we have to utilize IGST credit. So accordingly we have utilized first to pay off IGST amount or tax liability under IGST. Excess balance we have utilized to pay off equally CGST and SGST liability, and now the balance has become 0 or nil. Now once IGST balance has become nil, further we can move on and we can utilize the credit of CGST and SGST. So under CGST we have got the credit of rupees 52,500. Again the rule says that first any credit has to be utilized to pay off the liability under the same head. So the CGST credit which is available first needs to be utilized to pay off any liability if it is there under CGST. As we have calculated under CGST, we had to pay 72,000. However, out of that 5,000 we have already paid or has been adjusted with the excess balance of IGST credit which was available. So now after that adjustment 67,000 is still payable under CGST. The credit available under CGST is however only 52,500. So fully this credit will be utilized to pay off this liability, and out of the 67,000 liability 52,500 will be adjusted with this credit, and balance 14,500 is a net tax liability which is still remaining and which we have to pay in cash using the specified modes which we will discuss later. The payment system or the payment process, using that this has to be actually paid, and for this no adjustment is now possible. Moving further, SGST credit we are having 52,500. Again under SGST initially we were having the liability to pay off 72,000. However, from the excess credit available under IGST we have already adjusted the amount of rupees 5,000. So now the liability under SGST payable is rupees 67,000. The credit which is available under SGST, again the same rule. First we have to adjust to pay off the liability under the same head, that is to pay off the liability under SGST only. So this 52,500 will be utilized fully to pay off this tax liability under SGST. So the credit of SGST will be utilized here 52,500 against the 67,000 liability, and against balance, again the balance 14,500 will be payable